Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you and a very happy Friday. In today's program, I want to discuss a certain earnings report which came out yesterday, late last night, and recent developments for the euro. But before we get into that, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's crack on. So, yes, those of you who were very kind to join me for my late afternoon session know I did mention that a certain earnings report was due after the market closed yesterday, and that was Snap Incorporated. And I did mention that there was quite a lot of pessimism in relation to this report. And indeed, Snap Incorporated, I guess you call it Snap Inc., released its earning report after the market closed, and the revenue was announced at 1.11 billion versus 1.14 billion expected, so a lot less than anticipated. And in fact, in this report, the Snap Incorporated CEO, Ivan Spiegel, I think it is. Apologies if it's wrong, I'm crap at surnames. He said, while the continued growth of our community increases the long-term opportunity for our business, our financial results for Q2 do not reflect our ambition. Knock-on effect, well, there was two knock-on effects. First of all, Snap shares fell by about 25%. 25%. But it wasn't just Snap which suffered. Because those of you who were kind enough to join me yesterday afternoon, I said the reason why I was keen on this report was the knock-on effect it would have for other social media platforms. Because what happened after that was the likes of Meta, which is Facebook, Alphabet, which is Google, and other companies that sell online ads lost about 47 billion in combined stock market value yesterday. 47 billion. Now, I don't know if you guys remember, but back in May, I did a video again on Snap when the CEO mentioned that he downgraded his forecast and there was a knock-on effect with the social media market in general, and it was. This just goes to show that there is a big amount of pessimism or less confidence in the social media market because they rely on selling online ads. So yeah, this clearly shows that there is an impact on that. And up next, which I'll go into more detail later this afternoon in my afternoon broadcast, is Twitter. Twitter is going to release its earnings later this afternoon, or not later today after the close again. And I really think this is going to be a real potential barn burner. So it'll be really interesting to see what Twitter shows, especially with all the drama with Musk and the buyout and things like that, of that nature. In fact, let's have a quick look at Twitter now, actually. Obviously, where it closed yesterday. It closed at $39.48, which, like I say, and if you can see the decline since the Musk buyout, or the Musk's attempted buyout of Twitter, I think this earning report is going to be quite damning. But anyway, I'm going to go into more detail about that later this afternoon in my afternoon session. Right, other news. German manufacturing PMI. That came out about half an hour ago. And basically, it came in at 49.2 versus 50.6 expected. Now, this is the Purchasing Manager Index, by the way, inventories, okay? Any number below 50 is very, very negative. Very negative. So 49.2 is very negative. In fact, if we look over since January, what the German manufacturing PMI has been, in January, it was 52. In February, it was 54.8. And then wrong way around. January, 59.8. February, 58.4. March, 56.9. April, 54.6. May, 54.8. And June, 52. And now it's 49.2. So that is very negative, the German economy. Don't forget, Germany has got a huge energy crisis, especially with the gas issue from Russia. And the knock-on effect this morning is that the euro is feeling under humongous pressure. And I'll bring the euro up in a minute. Obviously, ECB raised rates yesterday, and the new anti-fragmentation tool has not impressed the market one bit. So let's have a quick look at the euro now. I'll bring it up, and we can see what this latest German data has done to the euro. So let's bring it up now and have a look at it. So as you can see, on the back of the interest rate hike yesterday, it touched that key level of 1.0268. But after the press conference, where obviously Christine Lagarde was so unimpressive, it came under pressure. But now, with that German data as well, it's now back down, trading currently at 1.01452. So it's a huge turnaround against the euro. Because of what happened yesterday, but this German data is really damaging. At the moment, we've got the European purchasing PMI coming out as well. It'll be interesting to see what that says. But in general, not good news for the euro. The euro is under pressure. As I mentioned yesterday, people at Wells Fargo believes that parity again is in sight for the euro, and they actually believe it can actually fall down as low as 0.95. So yeah, euro under humongous strain. What else I want to talk about? Have a guess. Gold. Yes, gold is beginning to get its shine back. Again, I always talk about gold because I am a gold bug, and it's the very first thing I ever traded myself. So I do have a special love affair for it. But gold is beginning to get its shine back, and there's several reasons for it at the moment. And we'll pull it up and have a look at it in a second. But the reason for this is we had the US jobless claims came in again yesterday, higher than expected at 244,000 against 240 expected. And it's showing, basically, it showed that's the third straight week of growth in the number of people signing on for unemployment benefit. Third straight week. And remember, those who kindly watch me on a regular basis, they know when I talk about the initial claims, I call it a canary under the coal mine, like an early warning system for economic slowdown. And there is growth in initial claims, which is not a good sign. Plus, the ECB raising rates by 50 basis points has also boosted yellow metal because obviously new recession fears are coming up. So the yellow metal is beginning to get a bit of its shine back. And let's have a quick look at it now, actually. And here we have it. You see, like I say, if we look at it on a daily, again, it came under a lot of pressure earlier on in a couple of sessions, fell under the psychological level of 1700 because, like I said, because of those fears of initial claims and the ECB reaction, it's now currently trading at $1,717.79. And it's now testing that key level again. I've been watching of $1,727. If it can break through that, then we might see more of a bull run on the yellow metal. Like I said before, the reason why gold is not doing its safe haven status is because we've had very strong US dollar and we've had high interest rates and because of very high US yields, bond yields. But more and more signs of economic slowdown and recession, gold will start getting back its safe haven status. And I think we're beginning to see the gold bulls coming back into the market. It still needs to break that key level of $1,727 before we have a clear bull run on it, but it's beginning to get its shine back and it's looking extremely interesting. Okie doke. Other things. Today, we have Canadian retail sales due at 12:30 p.m. UTC. Expectation is for it to come in at 1.6%. It is a semi big event. And I think I'm like I said, I've got a bit of an interest in the Canadian dollar at the moment, especially what's going over there. The Bank of Canada has been extremely aggressive with their interest rate hikes as well, but they are bordering on a housing crisis as well, which I'm taking interest in. But this retail sales and it's been steadily growing for them as well, which would be quite interesting. Because of this, and because I'm interested in Canadian dollar, I will be doing a watch along for this event. So I'll be going online at 12:20 p.m. UTC to cover this event to see what the market reaction is with the US dollar, Canadian dollar, because I'm quite interested in the development of the Canadian dollar at the moment. So please come and join me. I'll be on air at, like I say, 12:20 p.m. UTC. So please come and join me. It should be, I don't think it's going to be, I'll be open. I don't think it's going to be as exciting as yesterday's with the ECB, but still, I still think it'd be an interesting thing to watch, and certainly how the loonie reacts. Other major events today, like I said, I've got Canadian retail sales, which I'm doing a watch along with, but we have got UK services PMI due very shortly. So that'd be interesting to see as well. As the market stands, the European equities, the FTSE is currently up 0.13%. DAX currently trading at negative 0.39%. And Eurostock 50 currently trading at plus 0.20%. So that's how it stands. But like I say, Canadian retail sales, that'd be interesting to see. Let's watch the developments on the euro, because that's under a lot of pressure, especially after that German PMI. And let's face it, the lackluster press conference from Christine Lagarde yesterday. I think it, personally, in the medium term, I am a bear on the euro. I think it's only a matter of time before we test parity again with the number of issues the European Union are facing. But anyway, let's see. What else? And I say, this afternoon, I'll talk a lot more about Twitter. I think that's a really big story waiting to happen. So we have to look at that. So don't forget, I'll be back online again at 12:20 p.m. UTC to cover the Canadian retail sales, and again at about 1:30 p.m. UTC to cover the US session and to discuss Twitter in a bit more detail, plus my usual weekly wrap-up of the week. And what a week we have had. Don't forget, you can ask me questions anytime you wish. I'm live, obviously, and live does mean live, so please feel free to ask me questions anytime you wish. Okey-doke. If there is no questions, don't forget, if you think of a question later and you just think of it, put it in the comments on either Facebook or YouTube. I will see them, and I will reply to those questions next time I'm live on air. So bear in mind, you have that option too. Anyway, till later, till 12:20 p.m. UTC. Don't forget, okay, if you're watching me on Facebook and you quite enjoyed this video, by all means, give us a follow. If you're watching me on YouTube and you've quite enjoyed this episode, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you enjoyed this video and you've put up with me and my over-the-top enthusiasm about the market, which I cannot help because I love the markets, then give me one of these. I see I've got a couple of likes already, and I really appreciate it. So it's nice to know that you like what I do. But anyway, till next time, or till later this afternoon, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.